Hello, greetings, and welcome to Dividend Blasters. This is our 53rd video. Topic today, debt crisis, the U.S. national debt clock. So today's video is a little different. I am not going to speak about particular dividend growth investments like a stock or an ETF. I'm going to talk about our national debt, something at the more macro level. And if you recall, I did a video a few weeks ago on inflation and the national debt. This is kind of like that, but a little different. I'm not going to go as deep. I'm really going to kind of do a recap of some of those key points, and then I'm going to jump right into the debt clock. Right now, what you're looking at here is a screenshot of the debt clock, and you can find it at usdebtclock.org. Let's press on. So a disclaimer, I'm not a financial advisor. The purpose of this video is for information and education. It reflects my own personal opinions, my research, and my experience as an investor and as a student of our economy. So please do your own research and consult a financial advisor prior to making any financial or investment decisions. And I will ask you now, and I'll probably ask you later, thank you for joining us here today at Dividend Blasters. Kindly ask you to give this video a like and subscribe to our channel here at Dividend Blasters. Smash that notification bell so you will know of any new videos, and share the video with a friend or a family member. I am going to go ahead and pivot now to the debt clock. All right, here we are at the debt clock at usdebtclock.org, and a good way to think of this is in a series of quadrants. There's 6 or 7 of them you want to be familiar with. I'm in the upper left quadrant. You can basically see here the U.S. national debt. The whole quadrant is red, and you can see that the number is running. It's live. And that right now, at this time, it is Wednesday, August 16th, 2023. It is 11 p.m. The U.S. national debt is $32.7 trillion. And they calculate that the average debt per U.S. citizen is $97,560. The average debt per taxpayer, right to the right, $253,686. Right below it, U.S. federal spending. Okay, right now at this moment, $6.3 trillion. And you can see that number is running. Why is it running? Well, some programs are on automatic pilot, like interest on the debt, or mandatory spending programs. They are spending. The U.S. federal budget deficit at this moment, $1.7 trillion. You know what? And you can basically see that right to the right, U.S. federal tax revenue, it's the difference between spending and the deficit. It's $4.6 trillion. Let's go right back to this left panel. I think that this is fascinating. The U.S. federal debt to GDP ratio, you can see the changes over the years. In 1960, the ratio was 52%. Okay, so the U.S. federal debt was approximately half of the U.S. gross domestic product. In 1980, it went down. It was a little under 35%. Went back up in 2000 to 56.7%. Today, 2023, it's 119%. It has almost doubled. It's almost doubled in the last 23 years. That is absolutely astounding. And I don't have to tell you that that's not good. It's not good to have national debt greater than our federal output or our national income. That means that we are in debt as a government. All right, I already talked about federal tax, U.S. tax revenue, $4.6 trillion. That averages to about $13,750 per U.S. citizen. Below, it's kind of interesting. It shows you what the U.S. tax or the total state revenue is on average. Or total is $2.3 trillion about, and local is about $1.24 trillion. Then you can see the state debt figure. So total state debt across the country is $1.265 trillion. So what this tells you, and you look at the local, it's also at the local level. Total local debt is $2.37 trillion. So per citizen, $7,000. State debt per citizen, 3,700. So, we don't just have a federal debt problem. We have it on all levels of our government. We have it at the state level. We have it at the local level. So let's go down a little bit more. U.S. GDP at this moment, 27.45 trillion. And then I'll remind you that the U.S. national debt is 32.7 trillion. That's how you get the 119% ratio of the debt per GDP. It is not good. It's not a good measure. What are some of the key budget items that are driving our debt? Well, I will tell you the largest budget items here, and there's 4 of them. The first 2 and the 4th are mandatory spending items. Medicare and Medicaid, 1.6 trillion and counting right now. Social Security, 1.3 trillion and counting right now. And then let's go to the 4th. Interest on the national debt, $660 billion. And then if you go to the left, it's a discretionary item. It's defense and war, almost $800 billion. So what's kind of disheartening is that the interest buys us nothing. It buys us taxpayers nothing. All it does is it buys us time from having to go ahead and pay off the debt. And it saves us from defaulting on the debt, which, by the way, would be catastrophic. We, as a country, cannot default on our debt. It would wreck our economy, wreck our investments. It would destroy our standing in the world as the sole reserve currency on the planet. So it can't happen. So that's what's keeping us from defaulting. And the problem is that it's growing very fast. That interest on the national debt is growing at about $1.8 billion a day. It'll get to about $750 billion by the end of the year. And at some point, it could actually get bigger than national defense. And that's really not good. It's a waste of resources. We really have to get our debt level under control. And if we can do that, we can reduce that growing interest. If you look below, there's also interest in the private sector. So for instance, we have a figure around U.S. total interest paid. So it's not just at the government level, it's at the consumer level. So if you see below, you see things like bank interest, personal debt. These are all different types of debt, but they're debt. Look at student loan, $1.8 trillion. On average, that translates to about almost $41,000 per student. Look at credit card debt. Everybody has, well, not everybody, but a lot of Americans have credit card debt. It's $1.3 trillion. And that is a lot. If you look above, total personal debt, $24.6 trillion. And then on average, that comes to about $73,000 per U.S. citizen. That is a lot of debt on average. We're an indebted country. I'm sorry to see that. The next panel below relates to money creation. I'm going to draw your attention to that middle panel where it says U.S. M2 money supply. Right now, there is about $20 trillion in money supply out there in our economy. Back in 2000, it was about 4.8 trillion. So it's almost grown 5-fold. And you know what? When you have money supply growing that quick, you're adding all this liquidity to the economy. The Federal Reserve does it. They do that by printing money so they can, help finance our growing debt burden. You're going to have inflation. And then what does the Fed do to fight inflation? They raise interest rates. And we've seen that go on for the last couple of years, and it's not painless, it's painful. It's painful for consumers. It's painful for borrowers. It's painful for investors because if you have money in the stock market, you are seeing the bears go in there and do panic sell-offs. Now, if you're a dividend investor, you're less impacted, but you're still impacted. You know how? Your investments may stop paying dividends because there is impact that are felt throughout the entire economy. some of these companies invest in may be part of the supply chain. They may not be able to participate fully and execute in the supply chain. They may not be able to generate the revenues that they need to, and they may need to cut jobs. And all of a sudden, people are out of jobs and they're not investing. Or, if these companies are not generating profits, their cash flow may be down. They may not be able to generate dividends. So there's a whole host of problems. But anyway, I'm not going to get into that. I cover that in the other video. You can check it out. I'm going to get more back to this debt clock. The next panel below relates to trade. The U.S. debt held by foreign countries is $7.6 trillion. Our trade deficit this year is over $1 trillion, and about $280 billion is held by China, one country. And you know what's sad? Look at the U.S. imported oil figure. It's $250 billion. That means we're importing more than we're exporting. And we were well on our way just a few years ago to becoming oil or energy independent and energy dominant. And there were some policy decisions that really worked against that. And that's really unfortunate. Let's go to the panel below. We can see household assets, total U.S. national assets, and assets per citizen. I think that's interesting. On average, assets per citizen, $582,000. Now, that doesn't mean that every U.S. citizen has a holding of $582,000. That just means that on average, you got a lot of millionaires out there. You got a few billionaires. But if it's spread across the entire country, then on average, it's $582,000. Go to the right. Look at the liabilities per citizen. All the way to the right, $575,000. And a lot of that is public debt. So Social Security liability, Medicare liability, U.S. unfunded liabilities. And it's also a lot of the personal debt, like the credit card debt, the student loan debt. It's all that stuff that goes into that. So really the purpose of this video was just to give you some insight into all the different levels of debt. And this is really a wonderful resource. It's usdebtclock.org. I encourage you to go to it, watch it, monitor it. You can actually click on some of these other tabs here to do a little bit more of a drill down around gold supply and demand, as well as home sales, auto sales, energy output. It's quite fascinating. So folks, that is it. That's the end of our video. I hope you found this to be informative and insightful. And until our next video, have a wonderful day and God bless.